there's a potential that we actually have continuation from this into especially Thursday and then Friday around OpEx. I would not be surprised to see another retest of this blue box. If price was able to get above this blue box, then we would see more upside potentially to retest the higher end of my red box here around 4,500. I'd only see around 4,500, a little bit over as the max going into next week. This is where I'd actually add the other 1/2 of my short position. So an absolutely perfect move by the S&P 500 since our last video we posted last week on Wednesday. If you remember, I was looking for slightly more upside based on the flat bottom reversal structure that Wednesday printed. And I said 4,500 to 4,510 would be the max extent of that move that I could see, which would be followed by a large sell-off because remember, I am still bearish into the end of the month. And we did in fact see that sell-off materialize. It happened on Friday on quarterly OpEx, which by the way, 12 of the last 14 quarterly OpExes have ended red for the S&P 500. So that's a crazy statistic that remained true in this case here on Friday. And we saw it downside to take out all the gains from Thursday as well as Wednesday. And now we're sitting at 4,450, which brings a very interesting end to the month of September. There's a lot to talk about today. The first thing I want to go over is actually this chart on the S&P 500. We opened right at the lower end of the bear flag here. This is actually a bear flag setup, not your conventional bear flag, but I'm still going to identify it as one. It's still a channel nevertheless. And we actually broke below this channel for the first time over here in the middle of September, but we got back above with this large gap up over here. This was a decisive break that continued to the downside. We actually went all the way back to this trend line over here, this blue trend line. So this trend line starts all the way back over here on September 1st. And you can see it's acted as a resistance numerous times until we broke out with that large gap up. But so far, we've been unable to stay above for very long because it's retesting it right now. This trend line is basically everything for this week. If bulls are unable to hold this trend line, then we will see a flush scenario. Now, there are a couple mini, at least minor supports between 4,450 and 4,430 because this would be a double bottom potential. But the reason why this level is so crucial is because of that trend line. We had a breakout above that trend line. If we fall below this, that means that was a fake breakout move, which means it's going to be even more bearish going forward because if you have a false breakout that shows a lot of weakness, a lot of sell pressure, and buyers are unable to absorb around a key inflection point, that key inflection point being 4,450. So over here, Monday and Tuesday, there is a potential for a short-term bounce. It doesn't have to happen because right now we are starting that aggressive downward move. Whether it happens this week or the following, I do expect momentum to pick up. As you know, my target is that we should reach below the current lows that were made on August 18th. And as crazy as that sounds, it's still definitely a potential here going into the end of the month, potentially even that first week of October. We just have to break below this about 20-point range in order for that to be definitely in the market sights. But again, just to reiterate, this trend line around 4,450 is going to be everything. Monday and Tuesday are actually the 2 days before expiration. Typically, expiration is the week of OpEx. However, it's going to be the week after, so it's this upcoming Wednesday. There's a potential that volatility is subdued going into expiration. That tends to be the case, so contracts can close out of the money. But I'll show you over here, we did have a spike on the VIX, which also, if you remember from our last video, I was looking for a spike below the current low that we made of year on volatility. So that low is from September 1st. We did get that spike below, went into a 12 handle, and then we had this large upside move to finish Friday, all the way up to around my 1420 pivot and this trend line convergence. In order for there to be more upside in volatility and hence downside in the market, we do need to get above both of these, or at least this trend line convergence with my horizontal pivot here. So do watch if there's a break of 1420 that can warrant a lot more upside in volatility. But like I said, we do have expiration coming up on Wednesday, which can mean vol can be suppressed slightly up until that date. That's still a valid scenario here. And if that is the case, where we do see upside between Monday and Tuesday, that's basically a last second opportunity for a short. Personally, based on how many people this caught off guard, this downside move on Friday, I like to see this just continuously sell off from here because a lot of people weren't positioned accordingly. They potentially wanted to short later in the month or were even long after seeing this large move up. But we'll see what happens between Monday and Tuesday. And like I said, in the start of this video, between this range here, 4,430-ish to 4,450, if this breaks, we will see momentum pick up to the downside significantly, all the way down to that low that was made around here in August, around 4,340. So definitely a very critical time period here. This upcoming week and the following week are going to be the deciding factor for how low we go for the rest of the year. The next 3 weeks in total should present the extent of this entire down move that I'm expecting. So it should be finished by the end of the first week of October. Keep that in mind. That's a relatively small amount of time for this downside move. And there's a large, long opportunity after this short opportunity that I'm currently in right now. So I will, of course, alert that here on this channel when it is time. But at the moment, it is time for short emphasis, and why I was so adamant on shorting on this pop up, because that potentially was the last opportunity to do so before momentum picks up to the downside. Of course, we will see what happens here early this week, but just wanted to share all of that on the S&P 500. Very critical time period. Cannot stress that enough. Equally for tech. Tech got hammered on Friday, saw a lot of downside, and it's lower and closed lower than my demand zone here. Now, as with the S&P 500, there's a potential for a bounce into about Tuesday or Wednesday this week if it decides to. Of course, doesn't have to, because again, the trend is down now. I need to reiterate that the trend would be down into end of month. So any pop would be shortable if it did end up happening. The reason I say that, again, with the expiration thesis and expiration being on Wednesday, and we likely see vol suppressed until there's a potential for a bounce here in the market. But also there is an inverse head and shoulders pattern. You can see here on the 15-minute chart, we have the left shoulder head over here and then the right shoulder. So there's potential to go up, but we did close lower than this range over here. So that is a bearish development. We have yet to have a close below here after breaking out at the end of August. Over here was able to pick up, and it's continued to get picked up each time we've tested it, as you can see over here, as well as at this candle. So this is the first large break. Not only was it the daily that closed below, it was the weekly as well. So this is a bearish daily and weekly close, which should result in a lot more downside. Whether it starts early this week or it's by the end of the week, we'll find out soon, just like the same thing with the S&P 500. But just keep this in mind. Again, opportunity if you missed the downside, there is an opportunity for a short setup if we do get a pop here early this week, at least if it presents itself. So just something else I wanted to go over. And then lastly over here, flow. Based on Friday, there was quite a bit of put flow. You can see here a little bit earlier in the session, 1.1 million in premium, 1.4 million in premium. This was for SPY and QQQ. These were out the money puts, or about at the money. You can see here 1.6 million. So decent amount. They're starting to light up, especially with all that downside momentum that we were seeing based on Friday. But continue to watch put flow, especially if this picks up, if there is a bounce this week. Like I said, if we do get some form of a bounce, like I was showing you on whether it be the QQQ chart or the S&P 500, if we get that bounce into the expiration, however small or large it may be, there's a potential to add for that short position, like I was saying, and we may see institutions / whales add puts into that strength, and that would be a good indicator of them shorting the pop, and we potentially see it fall over after that. So this can be a useful tool if we do see that scenario present itself. And then the last thing I do want to talk about here, dark pool prints for last week. We go here and filter for Monday of last week to Friday, so the 11th to the 15th. We can see the largest prints from that week. We had 2.3 billion and 1.1 billion right around each other here. So a little over 3 billion in premium, around that 450, just a little bit over 450 level. Decent amount, 3 billion, definitely something you do want to watch for. As we scroll down here, you can see 1 billion, not too large. And then we get to the 1.8 billion and 2.4 billion. I shared this one here on the channel on the Wednesday video. This is definitely an area of interest, and we sold off from around this range. That's another key thing. And now as I scroll down and we go to lower prices, because you can see here it's in chronological order of each price, I'm going to be more interested in premium, because that means there's potential accumulation as we go down, as we were falling. If there's not that much premium, that means that buyers are not yet ready to absorb price falling, especially through the dark pools. This is just one indicator that I like to use that can help me determine if there's going to be a potential reversal. So first one here, we have 4.5 billion at 446.59. If we go over to a SPY chart, we can mark that just to get a general idea of what that would mean. And that's still a lot higher than where we closed on Friday just by eyeballing it. So 446.59, roughly about here on the chart. You can see that's actually right around where we opened on the day, and we saw price collapse under this level. So this is definitely still in sell territory. After such a large dark pool print around this level, the fact that we closed meaningfully below it and just continuously sold off under it definitely shows a bearish emphasis, especially going forward into this week. And as I go back here to look at some other prints, you can see 3.3 billion, 445.91. very similar level, right around that level here. So 445.91 would be right here. We still closed way below that as well. So you can see we just tore through all of these prints that we were looking at from the previous week, which shows bearish emphasis. And if we do get a pop this week, then do watch both of these levels, whether it's 445.91 as well as 446.60. As long as we stay below that, there is a bearish bias going forward. So do mark those on your charts. As I scroll down to the rest, you can see there's nothing that's showing an indication of anything being supportive near the 443s or 444s. So we've yet to see any buyers at these levels, and we're meaningfully below the larger prints throughout the week, which means there is that sell bias going forward just based on dark pools. So like I said earlier, very critical week ahead, whether we get that bounce early in the week or not. Momentum should pick up to the downside, and the trend is most definitely down at the moment. Regardless, I'll see you guys next time on Wednesday for another update.